I'm back with a new update on ASML stock analysis. I have been buying and selling ASML since 2018. Recently, ASML has dropped by about 44% from its all-time high. And the question is, of course, is it a buying moment for ASML now? First of all, welcome back to Happy Investors. My name is Jorik Vermeulen and I've been investing myself for over 10 years. I am an entrepreneur providing pros and cons. I mainly invest in high-risk growth stocks and we share a lot through YouTube, our website, probably our newsletter, and to our members in the Happy Investors community. And regarding ASML specifically, let me first show you some evidence because first of all, I can of course show my transactions, but also that I indicated in October 2024, and that was around this price level, that it might be an interesting buying moment, but that I would be a bit patient myself for the new. And indeed, I did not buy more ASML. Nevertheless, the price did rise by about 13-15%. But given the overall market development, it has still dropped by 13%. And it seems that it might drop further. Still, ASML might be entering a buy zone, as they call it. An interesting price range to start buying, but I'm still waiting patiently myself. But that's more due to the overall market trend. Moreover, ASML no longer quite fits my investment strategy. In recent years, I have really specialized in small growth companies, also known as small cap stocks. That aligns more with my strengths as an entrepreneur. I am also action-oriented, which is not always positive for long-term investing. Actually, you really need to be passive as an investor and only exit when you're absolutely sure. Then you get a focused investment strategy like Warren Buffett. He does this by investing in relatively fewer companies, 10 to 15, and you invest relatively larger amounts in them, so higher percentages. And I invest in relatively smaller companies with more stocks to spread my risks. The vision I had since the summer of 2024 is coming true. I have no predictive value. I don't have a crystal ball. I share the latest update on that in the portfolio update of April 2025. Check our YouTube channel for that. And then I also explained that I have been selling positions in America for months and have been selling more and more and have shifted to Europe and China. And that is simply related to the overall market trend with highly valued stocks, expensive prices. The CEO of NVIDIA, Jensen, who came into the news a lot because drawings was going to give. Totally earned. Great CEO. Only when these kinds of segments play out in the media, then you know it's time to sell. And the last phase is when non-investors or beginner investors start telling me which stocks I should or shouldn't buy. And then I ask why. And there's not really much reasoning behind it, except that the stock is rising significantly. So yes, those are signs that you should be cautious. But that's not criticism at all. When I started, when I was 23, I didn't know much about it either. But if you keep doing it for a very long time, then you naturally become a bit better in the subject you are researching. I'm not saying that I'm good or bad. That's not what it's about. It's more about trying to learn from people who are a few years ahead of you. And we're going to talk about ASML analysis. I mentioned that on October 26th, and that's why I'm showing this. For you, for a bit more context, to assess whether I'm talking nonsense, yes or no. You can just re-watch this analysis and see if it matches what I'm saying now. I personally like to show a piece of evidence, but first, I made my first purchase of ASML in 2018, as I see it at a price of around 160. Turned out to be a very good move in hindsight. You also see that I sold once during the Corona crisis. If you're talking about market timing, which is working out well for me at this moment, it's not entirely market timing, but I learned from expensive mistakes during the Corona crisis. In short summary, the Corona crisis came. Winky dropped minus 30%. I bought a lot more, so I did everything perfectly until the stock market started rising a lot again. And I thought I was being smart with the market because, hey, how can the market rise so much in a short time while the Corona crisis isn't even over yet? What did I do? I sold a lot way too early because prices just kept rising. A really stupid mistake. What happened? I bought more in 2020 later, so at a higher price, as you can see. First sold for 270, then 300, 320. Yes, actually, beginner's mistakes. This was 5 years ago. Well, at that time, I had been at it for 5 years, approximately, but in recent years, more full-time. Fortunately, I learned from it, and I hope you learned from it too. Don't try to time the market too much. Only do it if you are absolutely sure. And being absolutely sure is never 100%, so you can make mistakes there. But a second important lesson is if I had just held on to that 1 on 70 price for a very long term, then it would have been much better, of course. That's a bit of the lesson that Warren Buffett and Charlie Munger want to teach us. Keep it simple. Invest in high quality stocks. And ASML is also considered a high quality stock. That means a company with a strong competitive advantage, which likely, because they have a strong competitive advantage, can thrive for many years and due to that position can achieve high profit margins. Because they achieve a high profit margin with actually high return on equity, and return on invested capital, then you will eventually get that as a result for the very long term. So that's an important lesson. And you see, yes, that's the mistake I made by simply selling too early. Did buy again later. And after that, I did well in 2021 because I bought more and then sold at much higher prices. Okay. You see that a mistake led to 2 times. Good. A better estimates because the last time it was sold somewhere here in November 2021. Since then, it indeed dropped by about 46%. Then it actually, if you want to share, just rose again by 30%. There was a gap of 3 years in between. So that's not really very high. Return over 3 years. But now, again, it has dropped significantly by about 25%. I sold because I believed that this price valuation at that moment seemed a bit too enthusiastic. Then I was able to buy more at a lower price. Very good. And after that, I bought more again. As you can see in 2024, in line with my overall portfolio, with a shift from less America to more Europe, I also sold some ASML, specifically because in recent years I have focused more on investing, growth stocks, high risk profile. ASML no longer fits under that. Yes, you can say what you want about that. I'm not saying it's the best strategy, but I do what works very well for me, and that is investing in high or relatively small growth stocks, growth companies. Having said that, I have been following ASML for quite a long time, since 2018. Okay, I'm going to tell you right away. I'm not the ASML expert, and that's also the reason why I'm not super enthusiastic about this price drop. I do think this is an interesting buying zone for the long term. The only problem is that I'm not the expert in this industry, and also not specifically in ASML. And because of that, I do read a lot, and my only difference between 100 hours researching a company or 1,000 hours, and I would personally listen to the one who has done 1,000 hours because they can assess much better whether ASML will still be superior with their machines over the next 5 or 10 years. It's all about being able to protect the profit margin. Well, the price has dropped significantly, and you see I have sold nicely at higher prices a few times, both in 2021 and 2024. Well, that went well despite mistakes in the past. Very nice. And now I do think that an interesting buying range is coming again, only because the entire market is under stress and a bit of panic. It could go further, and it could be that the price currently at 65 euros, that it might drop to a low of around 400 at the 2022 price level. And if really shit happens, then it could drop much further. But that is not the case yet. Let's take a look at some characteristics of the ASML stock. First, Edward Maxim. By the way, in the portfolio update I mentioned earlier, have we made shifts apart from Giro to Maxim? And I explained that in detail in the portfolio review and in the upcoming videos. One of the tools also at Maxim/Interactive Brokers is Morningstar. I always find it a useful source because they look at the fair value estimate. In other words, the intrinsic value based on discounted cash flow. In other words, suppose you now have a company in your sights and you can take over 100%. So buy the company 100%. What would be the fair price you would want to pay in the context of risk and return? Actually, that is the price of intrinsic value. And of course, it varies per company. But the point is that if you have a wide moat company, meaning a company with a strong competitive advantage, then it actually falls under a high quality stock. That's not really a category or definition, but I refer to it as a high quality stock because you then have, let's say, a piece of quality, a quality stock from a quality company. And quality means that you could in principle, pay higher prices because in the long term, it also realizes a higher return on equity and return on invested capital. And that, of course, again, has a one-to-one relationship with intrinsic values. That is important. Well, I do wonder to what extent the fair value estimate from Morningstar and the figures we will soon see from all the screening statistics, and to what extent that is now reflected with the current circumstances of the past 2 weeks, especially the wild card that Trump has played with tariff increases 10% on everything. That is, of course, quite extreme. China, which announced today more than 30% in tariff increases. So that's just a complete economic war. Yes, I wonder, of course, that is not implemented in these screeners, and that is immediately a major disadvantage of all the screeners we have here. They are figures and it's all filled in based on, but yes, people who input it, computers and things like that. So you always need to conduct thorough, independent, fundamental research on the company and know what intrinsic value is. Okay, that's clear then. Well, we see that the price-earnings ratio is dropping to 28, and in the history of ASML, such a price-earnings ratio of 28 occurs. Not very often. The average price-earnings ratios are actually a bit higher, but still, every once in a while you find a price-earnings ratio below 25, even once almost 20 in 2018, and that means that the price-earnings ratio is relatively high. That means the market is willing to pay a relatively higher price-earnings ratio for ASML. Why do I mention this? Is it a high-quality stock? People are willing to pay a higher earnings ratio. What does this actually mean? It simply means that if the price-earnings ratio just drops to, for example, below 25, then it becomes more attractive to buy, provided, of course, ASML can maintain its long-term competitive position for high profitability. And that last point is, of course, really the crucial question for long-term investors. The price-earnings ratio over the past 20 years has averaged 27. That is actually quite high. Over the past 5 years, it was even 40. But that's really just too high. 30 is actually also quite high. Even if you maintain 30, then it starts to become interesting. Suppose we can currently buy at a price-earnings ratio of 30. We need to refresh for a moment what it is doing, and we can buy at a price-earnings ratio of 30. Well, currently it has dropped to a price-earnings ratio of 28. Then the forecast would result in a quite attractive return of about an average of 23% per year. Should you immediately start buying? I don't think so. As I said, the market trend is that the rates are declining. I only want to increase that. And below we see the EPS forecast. Firstly, forecasting is difficult. Secondly, forecasts are often inaccurate. Thirdly, forecasting in this model. I doubt if this is now updated based on the developments of the past week. Last week, tariff increases, 10%. China is now coming with higher tariff increases on America. ASML is simply affected by this, because they, of course, export a lot of machines outside Europe. So that is problematic. So I doubt if this is correct. So I propose that in 2 or 3 months, I present a new analysis of this tool. But more importantly, you should start thinking logically yourself. Okay, this company ASML currently has this much revenue, this much profit. What is the likelihood over the next 5 or 10 years that they will generate more revenue and also more profit? And that is, of course, the crucial question. If you delve deeper, a company that currently has a certain revenue can over the next 5 years have the same revenue but still be significantly more valuable. How? Simply because they can boost the profit margin by, for example, creating operational value. And as a result, they generate more profit with the same revenue, and thus the company is worth more profit in 5 years. So there are a lot of factors. It's too complex to keep repeating all of that every time. But anyway, market screener, a number of things. When we look at valuations, which I would like to share with you, since you probably don't have much access to these tools yourself, twice earnings for 2016 is valued at 20, 2017 even at 16.7, relatively low. The ratio then drops to 0.7. The FCF yield, the free cash flow yield, is not super high. Notable. Here you also see EPS estimation, but again, the same applies here. How current are these figures? The same goes for the factor analysis. The figures are a very important aspect, which we repeatedly use in our video analyses. Price to earnings. For next year, an estimate of 23, incidentally, somewhat comparable to the sector median. 23 is not super high. So for ASML, this would be more attractive. Only the question is whether all of this is still current. That is, of course, the crucial question. But what we can do is look at, for example, the good figures. And not so much for next year, but look back at the history. History is often more guiding, and it shows a demonstrable trend. And if you see that a company like ASML, for example, has had relatively high revenue growth for 10 consecutive years of 17% on average and a profit growth of 18%. Those are, of course, very interesting compounding growth rates. And this is what Charlie Munger says. He just states a simple proposition. If you invest €1 in a company that on average generates a 10% return on equity, so return on equity, RD, then you will simply achieve an average return of 10% from start to finish. So that seems, for example, with an S&P 500. If you really buy a high quality business that achieves 15%, then you will not achieve an average return of 10%, but 15%. What is crucial about this simplified statement is the price you pay at this moment. So the lower the price you pay in the short term, the better. That is, of course, for your long-term return. That is all very logical, of course. Only in practice, it is more difficult for most to apply, especially because emotions come into play, and then you see those prices. They just keep rising and rising, and then this news comes, great, all this and that. And it continues to sell at too high a price above the intrinsic value. And then you see that a 40% drop can quickly be realized. If that's the case for you, don't worry, it can happen anyway. It's okay. The important thing is that you learn from what has happened to you, what you could learn from it. And especially if you have ASML, I think it performs well in the long term. What you can always do is simply wait patiently. Don't sell at a loss, but just wait for the next 10 years. Or if you're convinced that ASML is a good choice, buy more. What is important to mention about ASML is that it is a high quality business. You can see this reflected in, for example, the net profit margin, which has been really very high over the past 5 years, 27%, but you also see the return on equity, return on total capital, all just superb good figures. So it is very interesting. With all these rate increases, this might be less high in the short term. The question, of course, is whether this is a temporary effect. Yes or no? I don't know the answer either. I hope in any case that Trump is a temporary effect. I have serious doubts about how well he will actually do for America. Maybe very well. I think he has the best intentions for America. Only the complexity of those rate increases, no idea how that will turn out. And that's also a bit of the problem. If Trump has to stop after 4 years and someone else takes over, and they undo everything again, retroactively straighten things out, what has been the effect then? Well, finally, briefly, what I always show. Rank rating tool. They indicate a buy signal. Again, I wonder how they determine the price, because Rank looks more at the short term. So for the coming 3 to 6 months, regarding the EPS development, the earnings per share, profit per share, and they give a price act of $750. Other analysts also issued higher prices. I am very curious. ASML is plummeting significantly. This could be a possible instant price level. If you're talking about support level, then you have another support level around. Not yet created, but actually around 400, something like that, as a kind of buy zone. It would be very interesting if the price earnings fall below 25 in the short term. But possibly if you also step in below the price earnings of 25, it might be that we have to wait very patiently for a long time until the market starts to rise again. So I am patient myself. I am waiting. I am very curious about what will happen with all these developments. But above all, don't worry. You only have money. Money is a tool. You let the tool work for you. So you're already doing that very well. The only thing left is detach from the head of peaks of emotions. Take a step back. Please don't look at your investments every day. Don't watch our videos every day. Hopefully not. Then you would see me too much as well. But in any case, avoid watching the news too much. Don't let yourself be distracted by it. Continue to purchase high quality stock on a regular basis. Businesses, or even better perhaps, passive ETFs with low cost for more risk diversification. Keep buying when stocks fall. especially if they have dropped by 30, 50, 70%. In the short term, it sounds like a lot of temporary pain, but it's all just temporary. Moreover, it's not pain, it's something you create in your own mind because you only invest with money you can afford to lose, and so you can afford to lose it. So if you can afford to lose it and it's gone, then who cares? Life goes on. Everything is more important than money. Thank you for watching. See you next time.